Welcome back to Liberty and Finance, and Reluctant Preppers. We're always glad to have this returning guest. Rick Rule is the CEO of Sprott Asset Management. He joins us from his office in Carlsbad, California. Rick, thanks for joining us again here on Liberty and Finance.
Pleasure, Dunnigan. I always enjoy these visits.
We always get a lot of questions submitted by our viewers when we have you on, and they appreciate that you're as experienced and involved as you are in many aspects of metals and natural resources, because their questions range across those topics. Right now, people are wondering what's going on. We've weathered the most strange couple of months that most people have ever experienced in more ways than one. I mean, it's the first time the whole world has been locked down. It's the whole first time that people have been told they can't go to work, can't go to church, can't go to the beach, can't go to anywhere. And they saw the stock market tumble by 35%, and then the Fed step in with words like unlimited and continuing to say the words unlimited, and they're seeing the apparent resurrection of what was thought to be down for the count equity markets, even though we're being told that the GDP is in horrible shape, manufacturing's in terrible shape, and customer sentiment's in terrible shape, and we're going to have the worst quarters on record, whatever, unemployment at depression level highs, and yet people are seeing that things have miraculously been put back in place, evidently. The house of cards has been reassembled. So the question we have right off the bat is, do you believe any of this? I mean, what's Rick's take on this house of cards being reassembled, and is this do you see this as most likely just a bear market bounce, or do you see this as, well, maybe they can keep this cart on the wheels a little bit longer?
Dunnigan, I don't try to understand things I don't understand. And so I'll say at the top of the question that what's happening right now makes no sense. And as a consequence of it, I don't try and make any sense of it. What I try to do is make myself individually, and as many clients as will allow me to, anti-fragile. A circumstance where we are unwinding a 10-year-long economic recovery, which is a recovery that in a historic sense was very long of tooth, and a recovery which, as we've discussed before, was, in my opinion, fueled as much by quantitative easing and debt and deficits as it was by increases in productivity or increases in trade. And when we puncture that recovery with a worldwide pandemic that slows down and results in synchronized slowdowns of economies worldwide, the idea that we bounce back as a consequence of that unscathed doesn't make sense to me. I understand the reason why it bounced back. Everybody says don't fight the Fed, don't fight the tape. I personally watched the Fed walk into the junk bond market 3 weeks ago in the most awesome display of market power I've ever seen. They took a market that was no bid and they closed it up 11%. There was one buyer. No, that's not true. There were 200 million buyers because they used our money to do it, or the money of the unborn. Can they continue it? I don't know the answer to that. I don't own a TV. As you can tell, I can't dress myself. So the question that you ask me involves market psychology and mass psychology. So I don't know the answer. I'm reminded, of course, of a very appropriate Warren Buffett quote. He says, in the near term, markets are voting machines. In the long term, markets are weighing machines. If you approve of the way people vote, perhaps this market makes sense to you. I don't. So I suspect that we will have to discover the weight of the market. In other words, we will have to await for a revision to mean in terms of value rather than price. That may not occur, but the truth is the way that is indicated by the tape is not a way that I am willing to play. So I'm personally sitting this recovery out. I don't understand it, at least in terms of the broad market. And if I don't understand it, I'm not going to play it.
One thing, and I know it's not central to what you described, but I couldn't help but take the lead. You said this long in the tooth market was pricked by a virus that shut down the economies and so on, would it be more truthful to say we don't have evidence that it was the virus that shut down the economies rather than it was a rather sweeping governmental actions and response to the virus?
I would suggest it was both. The truth is I'm not an epidemiologist, and I wouldn't understand the nature of their response was I an epidemiologist. I think whether or not some of the actions that were taken by various governments around the world, whether or not they were efficacious, will be a question that's going to be answered 2 years from now. Normally, a problem like this, a new problem like this, requires a variety of approaches. It requires, if you will, a market. It requires 1,000 policy responses, and 2 years from now whether the policy response was correct. From my own viewpoint, any policy response that relies on individual action and individual freedom is best. That's the way I'm built. Mm-hmm. Now, I'm personally 65 years old, and 7 years ago I was challenged with an immunodeficient disease. Irrespective of being asked by our president and my governor to self-isolate, I would have self-isolated as a consequence of my own personal circumstance. But I'm attracted to the Swedish model of individual responsibility and gradual herd immunity. Whether or not I'm right or not is a very different circumstance, and I suspect the answer to that will be apparent in 2 years or 3 years to those people who have the good sense and the knowledge to study it. I not being among them, I'm afraid.
It reminds me, though, of when you talked to us in the past about your planned move out of California because of the overbearing, over-controlling governmental restrictions and that sort of thing. I'm just sensing we've seen demonstrations happening in various state capitals around the country, quite vociferous groups of people speaking out for individual and common rights against what's been just sometimes baffling in terms of certain governors just taking positions that people don't understand how it's even backed up by science or anything other than just sort of a position of wanting dominance and control. Just wondering if people will say we've had enough, and if this does recur in some other form or mutation or whatever, if people will vote with their feet in the sense of just civil disobedience on a broader scale, doing more like a Swedish model, whether it's officially the policy or not.
Well, once again, I'm not an epidemiologist, but I hope that people engage in civil disobedience to assert their individual liberty. It will be no surprise to you that I suspect that the most virulent and damaging virus that infects us is collectivism in government. And as much as I fear being a 67-year-old immuno-challenged individual, I'm much more afraid of Governor Newsom and President Trump than I am a virus. Unfortunately, I don't have the ability to self-isolate from my governor or my president. I do have the ability to take measures into my own hands with regard to this damned lesser threat, this virus.
All right.
One of the many things that concern me about the virus, in addition to the policy response and the threat to health, is the fact that I think that it has served as an excuse to unleash economic nationalism, xenophobia, and racism on a very broad scale. The amount of anti-Chinese vitriol, as an example, that I see in social media is disturbing to me. Disturbing because it's the wrong thing to do, and disturbing because racism and economic nationalism makes all of mankind poorer, both in a moral sense and in an economic sense. I'm also troubled but amused by the politicization of the virus. When people discuss the virus, they're discussing the virus less in the context of the virus and more in terms of how much they hate the president or how much they hate the Democrats. And the idea that the subject itself has become a tool as opposed to a subject is something that concerns me in a very, very broad context.
Right. We saw with grave concern back in the 2016 presidential election that some people had to even just basically sign off from public media, social media for quite some time because it just got so rancorous and heated, and you couldn't even have a reasoned discussion about almost any topic without it devolving into that. So let's hope that that's not emblematic of how our ability to discuss things as a civilized culture and as adult people is transforming in the future. That when people talk about getting back to a new normal, I hope that's not the new normal, is our inability to have reasonable debates about things that matter.
I couldn't agree with you more. The truth is that it's more important to find common ground than find ground that separates us. My suspicion is that as human beings, if you sort of consider the realm of human existence to be a 360-degree sphere, my suspicion is that we have about 350 degrees of commonality and 10 degrees of difference. And the idea that we focus on the 10 degrees rather than the 350 degrees is perplexing and damaging from my point of view.
Well, okay, so back to the macro picture on the economic front. Yep. We've got like 3 questions or more. I'll lump them together and maybe use one to just represent the group of them. But they're just talking about, in this environment of major stock market collapses and then recoveries, they said, if Q2 earnings come out or if the stock market just drops again, will we see another sell-off of the same magnitude of the mining shares like we did in March?
Yes, I would suspect so. I suspect any crisis in confidence, and that crisis in confidence could be a series of lower than expected earnings, as an example, or it could be another sort of shock to the system. If we get any sort of shock to the system that impacts confidence, I suspect that equity markets in that circumstance would be negatively affected. And I think it's important for your viewers to understand that in the near term, at least, gold stocks are stocks. When stocks sell off, gold stocks aren't spared. Gold stocks react positively to the policy responses to liquidity crises. But in the near term, gold stocks are stocks, and it's important that everybody know that. I'm not saying, by the way, that there's going to be an equity market crash. I'm answering the question, which is to say that if there is another shock to the system, will equity prices, including gold equity prices, decline? And the answer to that is yes.
Which you've told us in the past spells opportunity to someone who already understands the value proposition.
Correct.
We have another question from Clint Richardson who says, this is about silver's outlook. What indicators, thresholds, or benchmarks would support a silver breakout through its historical high of $50? And what would need to happen in conjunction with the approach to that price to keep the smart money from selling into it? So those are 2 questions. One is, what are the steps you're looking for and as along the way?
The answer to the first question is I have no earthly idea. My experience has been that gold moves first and that silver follows on. My bias is that the gold market goes not just higher, but substantially higher. And I wouldn't be surprised, but this is not a forecast, that silver did take out its old high as a consequence of the fact that historically it has always moved later, but further than gold does. For reasons that I don't always understand. I just observed that it's true. I have no idea, frankly, why it's true. In terms of what would keep people from selling into the rally, I would suspect if anything did, it would be greed. That is to say that for some reason, increasing prices justify narrative, which is to say that people will like gold more at $50 than they did at $15. Mm-hmm. Hugely irrational.
Silver, you mean, yeah. Mm-hmm.
Silver, I'm sorry. Hugely irrational, but the truth is very true. I can assure your questioner that if the silver price moves through $50, he will know at least one seller whose name is Rick Rule. I will be scaling out on the way up. I have learned that in precious metals markets, the upside is precipitous and the downside is equally precipitous, but much less fun. And while I look forward to participating in that upside, I'm much less eager to participate in the downside. And I will be scaling out on the way up.
We have a question about other resources. You certainly look into other natural resources than precious metals. Scott Ellis asks, Mr. Rule, do you have an opinion on any other resources such as water, agriculture, etc.?
I am personally an investor in very, very, very high quality U.S. farmland, principally in the upper Midwest. Grain prices are at almost historic lows. And the consequence of that, I think, is that farm gate rents are very low, which is to say that the prices of high quality farmland are, from a historic point of view, and particularly given the competitive advantages that the U.S. upper Midwest has, quite low. So I personally am a buyer of very high quality farmland in the upper Midwest, which is then net leased out to people, unlike myself, who are good farmers. And I have been attracted to the water business for 35 years. You're going to have to pardon the pun, but the problem with the water market for investors is that it's illiquid. The ability of people to participate in the water market privately, which is to say buying and selling water rights, has become very difficult in the last 30 years. I've been active in that market, but there are only buyers today, no sellers. In terms of participating in the market in public equities, what you have to do is buy water in drag by buying agricultural stocks out here in California. Yes, they have names, one of which is Boswell Land and Farming, BWEL, on the over-the-counter market, 120-year-old company here in California. The other that one might look at is something called Limonera, which trades on NASDAQ, which is a citrus and avocado grower, but importantly controls very important water rights in Ventura County, California.
Now, a related question, and I think you've dealt with this before, and I think one of your answers was that there's an entire library of reading and videos that people can avail themselves of to learn more about this. But Martin Kroot says, Rick, what are your criteria for a great investment? Other than the underlying assets being undervalued, are there any other criteria that you look for specifically in deciding where to put your money? Management style, ethics, politics, or specific market conditions?
Unlike Warren Buffett, people are important to me. Warren Buffett says, buy a business that's a good enough business that it could be run by morons, because sooner or later it will be. I love the quote. But I seldom find businesses that are that good.
I wonder if he has a speechwriter who writes his quotes for him, because those are quite good.
He's just a genius. I love to quote him, so I don't have to think of the stuff myself. In the sectors that I am invested in, which is to say commodity-centric and very cyclical sectors, there aren't very many buy and hold stocks. And the consequence of that, because of cyclicality, because of volatility, because of the capital-intensive nature of the business, and because of the importance of a few critical decisions, I place real emphasis on management teams that I have prior experience with. I like businesses that are deeply out of favor. I like businesses, resource businesses, that are have the potential to be in the lowest cost quartile in their commodity, with the highest return on capital employed quartile in their economy. I like tier one deposits, which is to say deposits that will ultimately be of interest to the largest oil and gas or mining companies in the world. And I like them to be run by high quality management teams. The consequence of that is that companies on my 1 to 10 scale that rank as ones or twos are extraordinarily rare. I have awarded, if my memory serves me correctly, 7 or 8 number one rankings in 30 years of ranking companies.
So people who want to learn more about, we got there was the reputation of consistent producing management teams who can weather these cyclical conditions and make the right decisions at the right times. Other principles that people can learn about. Maybe this will lead right into this. Casey Moe asks, could you recommend a website, a book, or publication that newer gold and silver investors could use to find names and research various publicly traded producers, explorers, mid-tier, and streaming companies in the gold and silver space?
No, there are not any great books that I know about concerning precious metals investing, I'm afraid. There are some general investing books, which we've talked about before on your broadcasts. The Intelligent Investor by Ben Graham is where everyone must start. And then Securities Analysis. But these are books about investing generally, not books specific to gold and silver investing. It's important, too, that your listeners understand that markets are snapshots in time. And what is an investment that is good as of this date, the 20th of May, 2020, is information that's probably valid for a month or 6 weeks. Prices change, news changes, conditions change, lots and lots and lots of things change. And investors, sadly, must change with them. What investors want, of course, is a one-size-fits-all, good for all time, simple declarative statement, which is like saying that someone wants to date Miss America. You know, it's an interesting aspiration, but the probability of it occurring is very, very low.
We have another question here that's somewhat related, because Desmond Cahill is asking, regarding Sprott Senior and Junior Miners Funds, tell me why I should buy these versus pick individual stocks. I already own both, and I'm considering adding to my position in both. Just talk a little about how Sprott picks the companies for both funds, and what about potential... Okay, well, that goes on to a different question.
Yep, sure. Our ETFs are attractive relative to the broader ETFs because they're factors-based. Most ETFs take into account market capitalization, which is to say size, and trading liquidity. And the consequence of that is that they tend to overweight companies that are likely shrinking as opposed to growing. Our own funds are factors-based, which means that we take into account, in addition to the first two criterion, profitability and revenue growth. We are desperately afraid of buying into a dinosaur, that is a great big company which is on the road to extinction. The truth is that the best manager of your money is always yourself, if you are willing to put in the time to become a good investor. To the extent that individual investors would like to own 10 stocks, I ask them to be willing to spend 10 hours per month studying their companies. That isn't to say listening to CNBC or watching podcasts. What I'm saying is 10 hours per month that are specific to the 10 stocks they own, or 1 hour per stock per month. Read the proxy statement, read the management information circular, read the quarterly reports, read the press releases, and read them in context. To the extent that you are willing to manage your own money, hopefully with our assistance, that's a wonderful outcome. My experience is that the technique followed by most speculators is, quote, got a hunch, buy a bunch. If you aren't willing to do the work, then in that case, you need somebody to do it for you. And an ETF is probably a good answer because of the low fee nature of the product.
Rick, a couple of months we had you on talking about the Sprott Natural Resources Conference in Vancouver, Washington. Now with the COVID-19 response resulting in lockdowns and many cancellations of major conferences all over the country and all over the world, what is to become of the Sprott Natural Resources Conference?
We will be able to announce very shortly, hopefully among other places through your own good offices, the fact that our conference won't be a physical conference this year, but rather a virtual conference. We've invested a lot of money in technology that will allow people to attend our conference from the comfort of their own home. And we will very soon be able to announce what the sort of shape of this conference will be about. We're working very hard on it. We wanted to make sure, among other things, that the technology worked. We have never been in the events business per se. We have always been in the information business, and we wanted this event to convey a positive impression on Sprott rather than a negative impression on Sprott. So we've been working for about 7 weeks to ensure that that is the case. We intend to return to the physical format in 2021. We've been reliably informed that it's unlikely that the Canadian border will reopen even this calendar year. So the probability that we could have had a physical conference in Vancouver, irrespective of the threat presented by the virus, was nil. given that we're highly competitive people and we want to put on the best possible conference, particularly relative to our competition, we've done our best to ensure that the technology around this conference and the content that we're able to provide from providers is as good as it could be. And I'm delighted to say that the feedback, particularly from both exhibitors and content providers, is superb. The truth is, Dunnigan, that this virtual format has some real attractions to me. One is, as an example, at our physical conference, during the workshop breaks, investors had a choice between attending one of 4 or 5 or 6 workshops, and often 3 of them were worth attending. In the virtual program, you can attend one in real time and 2 others on a delayed basis on the same day. We work people very hard at our physical conference, 11 hours per day on many days. And the idea that your participation in the conference could take place over 6 or 7 days if you wanted, rather than over 44 hours in 11 days, has certain advantages to it. So I'm excited about this video format, although I certainly will miss the casual conversation that takes place at our conference around the coffee stand or at the bar or on wonderful boat cruises that we've been able to do on Vancouver Harbor for people.
It is remarkable how many times in life or in business the unofficial, unscripted, unscheduled, unstructured encounters can yield the most lasting insights, relationships, connections, that sort of thing.
You know, certainly at a conference, Dunnigan, if we have 700 high net worth investors in a room trying to figure out how to protect and increase their wealth, the idea that all of the investment knowledge comes from the dais out to the audience is stupid. Collectively, there's much more knowledge among the audience than there is at the dais, and having the ability to interact with other people is very, very useful. There are a whole coterie of people who would attend the Vancouver conference and then follow some of the speakers around the exhibit hall. The idea that you could follow Lucas Lundin or Robert Friedland and find out which exhibitors they were interested in had substantial value. I wasn't smart enough to figure out how to monetize it, but certainly my attendees were.
Interesting. Now, the next batch of questions is, I'll summarize them by this one submitted by Anna Krislinski. Rick, I'm still waiting to get your kind appraisal of my portfolio submitted the last time you appeared in this program.
I knew that would come. The truth is, in this calendar year, we've had over 8,000 requests submitted to us. I am reliably informed by the people who helped me respond that we're about 1,100 behind. We have automated this to the best extent that we can, which is to say that we have a database which is populated with 800 companies and updated weekly. Today, Wednesday, was that chore for me. So I spent 7 hours on the database updating companies. We are able to respond to 60, 70, 80 requests a day. So I would only ask that your listener be patient. The good news associated with that is that the longer we take, the more recent the response is with regards to the database. We have learned a tremendous amount from grading all these portfolios. And the consequence of that is that we will be offering up to all of the people who have requested portfolio reviews some of the lessons that we have learned from grading their portfolios. The data that we have assembled from the questions that we've been asking and also from our portfolio reviews reveals some very, very interesting things about investor psychology and behavior. And we hope to be able to incorporate some of these lessons and distribute to people who have asked us to grade their portfolios and who have contributed to this database. We hope to be able to share some of these findings with them.
All right. Well, could you refresh us on the latest protocol if people do still want to submit, if they want to add to your backlog of 1,100 plus ungraded natural resource portfolios? How do they go about that in this current time?
Connect to a web link, sprottusa.com/rankings. There you will have the opportunity to input your natural resource holdings. Please input both the names and the symbols and ask any questions that you might have. We will rank your portfolio 1 to 10, 1 being best, 10 being worst, and we will add comments to any company where we think our comment might have value. In addition to that, we will, as we always do, append to our response, which will come to you by email, the Barron's Gold Mining Index chart, which is the best chart I know as a visualization tool for the gold equities markets, and a 100-year commodity chart. All I can say is please be patient.
Very well. We've been speaking with Rick Rule, the CEO of Sprott Asset Management, here this Wednesday, May 20th, 2020. Rick, as always, thanks for joining and spending time with us here, answering our viewers' questions on Liberty and Finance.
My pleasure, Dunnigan. I look forward to doing it again at your convenience.
If you've decided that now is the right time for you to protect your family's financial future by acquiring physical precious metals, gold and silver, I'm delighted to let you know that I have now become a licensed dealer's representative for Miles Franklin, one of the oldest and most trusted names in bullion dealerships. And we can provide you with physical delivery to your personal possession or to professional vault storage or precious metals IRAs. Just email me at libertyandfinance@protonmail.com and please include your name and phone number in your email to libertyandfinance@protonmail.com. We'll get right back with you and find out how to best meet your needs so that you can either begin or increase your acquisition of physical precious metals now and protect your family's future starting today.